Today we have a couple of speakers. This is a little different for me. Normally the teleseminars that I do, and I've done almost 200 of these, normally the teleseminars that I do are just me talking. I need to have a bit of a disclaimer. The speakers today, Tom and Kevin, are with an agency, a brokerage, Frates. And the reason that I have them on today's call is because I think they have an interesting product, a product that's interesting to bankers. I have no interest in the agency, no financial interest in the sale of the product. My work is unbiased, and so the only reason that they're on this call is because I think they have something that I think bankers are going to be interested in hearing and responding to. I invite you to ask questions. You can either hit *6 to unmute your phone and then jump on and ask your question, or I'll be monitoring my email during the call. So just send me an email, and I'd be glad to ask your question. A reminder: please hit *6 on your phone to mute your call. I'm hearing a little background, so somebody's got somebody talking in their office. That would help. Unfortunately, I can't seem to mute everybody's line. So with that, let's start the session. Tom Mulligan, allow me to introduce Tom, is our presenter. Tom is manager of financial institutions at Frates Insurance and Risk Management out of Oklahoma City, Oklahoma. He is focused his 35 years in the insurance business primarily on the needs of financial institutions and the electronic transaction industry, so a bit of a specialization there. He brought his expertise as an underwriter in these industries to Frates Insurance and Risk Management in 2003. Tom worked as an underwriter and manager for both U.S. F&G and Bank Insure. He's a member of the Electronic Transaction Association and has contributed articles to a wide variety of journals focused on financial institution operations. And later on, Tom will introduce his cohort, Kevin, who will talk a little bit about a new product that's come onto the market. Take it away, Tom.
Hey, thank you, Scott. Thanks for asking us to have this webinar. We appreciate everybody's time coming on, and hopefully we can add a little something to your day and knowledge of the debit card and the digital transaction world. First slide. Now, Scott's handling the slides for me because the last time I did a webinar, I forgot to turn on my desktop, so nobody got to see my my PowerPoint. So I'm in the timeout chair, and Scott's doing it for me. So thank you, Scott. I'll start off the conversation on what's going on out there, recent data breaches, and the need for protection for your cards. We got Home Depot, Target, J.P. Morgan Chase, which really doesn't affect bank cards like the Home Depot, Target, Albertsons, Super Value. We also have Michaels, Neiman Marcus. You've heard them all. This year it's estimated that there'll be 673 bank card breaches. So far this year, it's up to 567, which is a 14% increase over 2013. They had just a little under 500. So far this year, bank card breaches, and I'm not going to try to make sure that you understand this is bank card breaches, not just system breaches, which is considerably different, and those breaches are probably 10 to 20 times the number of bank card breaches. Some of the things that we've seen on that is they're called the latest is remote access Trojans. Point of sale RAM scrapers is what they refer to them as. And the RAM scrapers can come on through a POS terminal, through an email that one of the merchant's employees gets, and it goes right into their system. It was a RAM scraper was what was used in the Target breach, and which they got about 100 million cards. Right now, they estimate that there's at least 12 different versions of the RAM scrapers, so it makes it really difficult for merchants to become PCI compliant. That's Payment Card Industry Digital Security System approvals, which currently all 6 million plus merchants are required to become PCI compliant. They can be compliant one day, and these RAM scrapers come along with a new version, and lo and behold, they get into the system. There's a new malware out there called Mozart. It isn't the same as a RAM scraper, but the scary thing about it is Mozart is a malware that customizes itself to adjust to the merchant security environment. So even if they think that they've gotten all the bugs out of it, Mozart comes along and actually can get into that security system and get through it. So what does that mean to banks that offer debit cards? Next slide. There's a number of different costs that are involved in it. The biggest is the fraud on the cards, and I'll get a lot more into that in a little bit. But there is reissuance of those debit cards, state notification laws. You have to hot card them. You have to reactivate the new ones. You can lose some income because a lot of cardholders will stop using their debit cards. Although what I was reading today was cardholders, debit card holders, matter of fact, they're just it doesn't bother them anymore like it did a year ago. I would imagine that there's a number of banks that's reissued cards a number of times this year, since there's over 567 breaches already. Hot carding costs you 50 cents maybe a card just to do that. To reactivate them can be anywhere up to maybe 75 cents. So it's real money, and it's costing the industry a lot of time and expense. Public relations, that's something that you don't want your bank in the paper because you had a bunch of your cards in a data breach or a card breach. And of course, the final thing is card integrity. Nobody in the bank card industry wants people to think that using your card is dangerous. Then they'll go to PayPal and different services now that are popping up. So you really don't want to do that. I mean, you get a nice transactional income each time the card is used. So it is important. Next slide. This is an older study from the Secret Service, and it just estimates how much these cards are worth to a fraudster. Once they get these 100 million card numbers, they got to do something with them. Obviously, no small group of hackers can use 100 million cards, so they go out on their websites and they post them and they make money on them. This study, which was done about 6 years ago, and it's pretty close still. If they get the account number and the CVV2 number, but no card, they can pass them off for $1 a card. Some of these fraudsters will use them on the internet, and if they get to the right site that doesn't have good fraud scrubbing tools, they can actually get some merchandise sent to them. The classic one, though, the $15 one, which is still probably about the same amount, is the track data, but no card, and that's what they're getting from Home Depot and Target and whatnot. Think about it, though. If the fraudsters that took 100 million cards from Target at $15 a card, if they were able to get rid of them, that's $1.5 billion. Just selling the cards. That's not the fraud on it. And then, of course, it goes up if it's a gold or platinum card, if they actually can produce a finished blank card, etc. So we really don't see very much of the $1,000 one, but the $15 one's bad enough. They can use that. They can, if they've got the equipment, they can put the track 1 and 2 information on a magnetic strip of a card in their name. So when they go to a store and they ask for identification, well, yeah, your driver's license and that card is the same name. Problem is that, and I notice it, I look for it. They'll look at my ID, but they never look at the little sales slip that comes printing out, because if I change the track information on the magnetic strip, it's going to have somebody else's last name on it. And then, of course, I just scribble that in. They don't look at it. The transaction's been approved, and they'll get paid. Next slide. I've kind of talked about all the problems in the industry and the fraud that can happen, but why would you want to buy fraud insurance? I've been in this industry, the debit card industry, on the sidelines for about 12 years, and I know there's really good fraud protection systems. And they will reduce your loss, and they will reduce your severity. And coming up next year, they're going to improve it substantially. But fraud still happens. I can remember when they came out with the track information that was the end of it. There wasn't going to be any fraud. Well, it took them a couple of years to figure that out. And the new chip and PIN information is my fear on that, and I've talked to those software people that's been designing it. Once these fraudsters who are ex-KGB people or Chinese, whatever their secret service is, they're going to get some of these chips. And they're going to sit there and analyze them for days, weeks, until they find out the flaws and how to get into the encryption on it. Once they find that out, fraud's going to start up again. In the meantime, they'll probably go into breaching your online customers, just so they can make some money on the deal. The bank card protector does offer all these type of protections, and I'll get into each one of them in a minute or so. But Frates, we are the MGA of this program, so we actually will be able to answer questions and your concerns. We actually wrote the policy, so we do understand how it works and how it applies to your situations. Next slide. I'm already insured. I have a bank bond. Some bonding companies do add a debit card coverage onto that, but most of those have a fairly high per occurrence deductible. They don't have per card deductibles. Some of them put annual aggregate deductibles. Most of them now have tried to make the deductibles where you probably never get any coverage anyway. Most of them just add on the coverage, but they do have some exclusions on there or conditions on their coverage that actually take coverage away. Some have better coverage than others. I'm not going to sit here and criticize any of them. There's a couple that are fairly good, other than maybe the deductible. So, and yet some of them have their exclusions, like forgery. Forgery can be pretty. That can do away with all signature-based transactions if there's a forgery exclusion on their coverage. So you got to be pretty careful when you add that coverage. In our opinion, you get what you pay for. The next slide. Let's see. Some of the key highlights of what would be covered under the bank card protector policy is, even if there's no physical card, it's a covered loss. The key or the trigger on our policy is that the transaction was not authorized by the cardholder. So as long as the bank has an affidavit signed by the cardholder saying, I had my card, but I didn't authorize this transaction, or I lost my card, or my card was stolen and I didn't authorize any, then it's a covered loss. We don't do things like requiring that the funds be verified. We even extend ours to overdraft privileges. I'll get into some of this in a minute. Worldwide coverage. We also include compromised cards, extra expense. We understand it's not your fault that Target had a breach and you had, 300 cards that were in that breach. It's not your fault. So we feel that we should offer coverage to help pay for some of those expenses to issue the new cards.
So Tom, that would be the expense of reissuing cards after something like the Target breach.
Correct.
How do the deductibles work on the extra expense coverage?
For a smaller bank, we can offer a $1,000 limit for the extra expense with a $250 deductible. For a larger bank, it's a $1,000 deductible with a $5,000 limit. Now, the nice thing about that coverage is that's per occurrence. So during the course of the year, a bank could have 4 or 5 claims on extra expense and be paid the $1,000 or the $5,000 each time.
To me, this is one of the key distinctions between your coverage and the coverage offered within the bond. I mean, there's many, but this is a key distinction. I don't, and help me if you're aware of any. I'm not aware of any bond that provides coverage for reissuance of cards when there's no fraud, no specific fraud against that particular account.
That's correct.
Good.
This is the only one that has that.
Yep.
The next slide.
I'm monitoring the my email account, so go ahead and if you have questions, you can either ask them by unmuting your phone and asking. Tom's glad to respond to questions, or you can email them. I've got a couple that have come in already, and I'll wait for these for the end. They're more appropriate for the end of the session.
Okay. Bank card application. We don't require that there's a bank card application. We understand that when you open up a checking account, you're going to have them sign, and if you offer a debit card, they'll be signing their agreement with you. But, we've seen that. We had a bank a couple of years ago that had bought another bank, and they canceled all their cards, reissued them under their name, but they kept the BIN number of the old bank, and technically they were liable for anything coming through that BIN. And, of course, fraudsters used that old BIN number, and I think it was in Germany where they used some cards in the hopes that some of the transactions would get through. Of course, some of them did, and they were able to stop that loss after about $5,000 loss on those cards. But it does happen, and these guys are always out there trying to figure that out. Next slide is overdrafts and credit lines. Again, our policy, of course, it excludes loans, but it has an exception for overdraft protection or similar type lines of credit. We had a business business account that one of their employees was fired, but they forgot to get the card from them, and they forgot to cancel that card. Well, about 3 or 4 months went by, and they were notified that they were overdrafted, and obviously they didn't take very good care of their account. They had already gone through all their money, plus they had a $10,000 line of credit. We did pay that claim up to the policy limit of $10,000, but that can happen. Next slide. That's good old fishing, farming, fishing, all these funny little things that they do to try to get information from card holders. We had a number of banks in rural Texas, up way outside of Dallas, up on the northeast side, and they were getting calls from their customers that they were getting text messages from the bank telling them that they think their card is being fraudulently used, and for them to call this number. And of course, the number was the fraudsters, and they were trying to get information on the card number and PIN and everything. And those happen. People do it all the time. So, and of course, that is covered. Again, our coverage only triggers when the transaction was unauthorized. And of course, you maybe take the position that, well, they authorized them because they gave them the card number. Well, they thought they were giving a card number to the bank, not to the fraudster, and obviously they did not authorize them. Next slide. Offline transactions. This is usually things that happen in foreign countries. They're not on the same networks that you folks are on, so they're technically offline. Some people define offline as signature-based rather than PIN-based, so you got to be real careful with that with some of these policies out there. If they exclude that, of course, our policy does not. Things like, one of our claims was a stolen card that they also had the PIN number, and the fraudsters they were using it at ATMs in Romania. They were doing it at real early in the morning, which was off hours at the local bank, so it was definitely offline. They were able to take a little over $10,000 from that particular debit card. One recommendation, especially in light of these breaches, that you may want to check and see if it's possible to do is when one of your customers uses an ATM in a foreign country, ask for them to input after the PIN number the CVV number on the back of the card. If it was a card in a breach, they would not have the CVV number or the CVC number. That would prevent a lot of fraud in those situations. Next slide. Verified by Visa, MasterCard, Secure Code. Quite frankly, we cover that. Obviously, it's a card not present transaction. The issuing banks are liable if the transaction is approved through one of those. I haven't seen any losses, but it is possible, and we will cover that for you. What I'm hearing right now is there are some fraud detection companies out there that are partnering with Verified by Visa and MasterCard to use their systems as a backbone. So that could start happening more than you think. Next slide. Reg E. Obviously, debit cards are controlled. The rules and regulations are controlled by Reg E. However, in our policy, we do have a condition that if you do get chargebacks, the chargebacks do have to be charged back. However, it doesn't have to be charged back to your customer in spite of Reg E. We had a bank just a couple of years ago that had a customer that wasn't checking their accounts, their statements, and went on for about 6 months. And obviously, according to Reg E, there was a lot of limitation on what they required to refund for them, but they absorbed all that loss. We paid the claim. Next slide. White card and internet transactions. Of course, cards a lot of them are not actually reproduced to look like a debit card. Those are usually used at pay at the pump. There's good security now on that. The automated checkout lines at some companies like Walmart and other supermarkets, they can use a white card there because they're just sliding the magnetic strip in. So both of those would be covered under our policy. Internet transactions, other than through the Verified by Visa, you are not liable for, but the problem on that is it costs time and expense for you to charge that back. So and again, as you know, we have the compromised card extra expense. We do see quite a bit of the fraud comes in on the internet. And of course, you're not liable for it, but it's a lot cheaper in the long run to replace those cards, and so we do recommend that. Yeah. Next slide is international transactions. Of course, we pay that. It doesn't matter where it comes, where the transaction occurred. We will pay that. We had a claim which I thought was pretty interesting because a lot of banks do have a system set up where, you know, if a customer is going out of the country, they'll let you know where they're going, and you can put a little alert on their card or their account. So when the international transaction reports come in the morning, you can look up their account and say, oh, okay, he's in so-and-so. We had one in a bank in Wyoming that the cardholder had gone in and said, I'll be out of the country for about 3 weeks. Oh, okay. They didn't ask him what country. He was going through Miami airport on his way to an African safari. His card was scanned and sent down to Brazil. Well, they paid every one of the transactions that occurred in Brazil because they thought, oh, that must be where he is, and he wasn't. So if somebody does come in and ask about or let you know that they're going to a foreign, ask them what country they're going to. Would have saved that bank a few $1,000s. Next slide, extra expense. Again, as we talked about, we will pay that. We basically will pay for the notification costs, the card, and the mailing of the card. So we're not going to pay everything, but some of your costs, at least you get some of that back using that. The target claim, we received 22 claims on that just for extra expense. I believe the loss is at $36,000 plus that we've paid all those banks for their replacement cards. Next slide. Just to reiterate that all these scenarios are covered under the Bank Card Protector policy. We do have we go as low as $1,500 deductible per card, so it does it is substantially less than any other policy out there. I added ID theft on the bottom. We do have a ID theft program for banks that they can provide ID theft coverage to all their cardholders if they'd like. It does come as a separate policy through AIG. Next slide. I'd be remiss if I didn't let you know there are some exclusions in here. Whatever is covered under your financial institution bond is not covered under the Bank Card Protector policy. So if one of your employees was the cause of the loss, or your bond would be applied to that. We won't cover any mechanical failure, faulty construction, error in design, etc. of your systems. And of course, if there is a failure or breakdown of your computer systems, we will not pay for that kind of a breach. Our coverage for breach is only a third-party processor or merchant. Okay.
Tom, we've got about another 10 minutes. Let me ask a couple of the questions that have come in. Describe the application process. Folks work with their local agent, right?
Yeah, they can work with their local agent. We're an open brokerage. We can appoint any agent that's licensed in your state and that has E&O insurance. That's all we ask for.
Fill out an application. How long does it take from the time you get the app to the time you issue a quote?
It usually takes about 7 to 10 working days before we can get to it.
So a week or so, and then coverage can be bound right away?
Immediately.
Yep, good.
Another thing is if your bond expires at a different time of the year, we could try to catch that up so it's it's the same date at renewal.
Oh, good point. Good point. If you pay a loss, there's a deductible, so the bank is paid a part of the loss. Do you ever subrogate, sue the another institution or somebody else that might have allowed the fraud to happen, and are you collecting the deductible that the bank is paid?
AIG does the claims in New York. We don't really get very involved with it, but as of today, I don't think they've used any of their subrogation rights.
So they have the right to do that, but you're not aware that they've actually done it.
They have the right to do that, but I think they look at it that it's costs more than what it's probably going to be worth at this point.
When you have when there is a claim presented, talk a little bit about the claims process.
Okay, yeah, banks are more than welcome to contact us, send us an email, let us know that they have a potential claim, and we forward that through our claim department here to the AIG claim department. They should notify you that they've received that, I believe, within about 5 working days. They set up a claim file for you. They also, at that time, will send what's called a proof of loss, and that'll request backup information to perfect your claim. Now, what normally goes into that is, one, a copy of the transaction, a copy of an affidavit from the cardholder not authorizing it, a copy that the charge has been reversed to the cardholder that shows that there is a loss. If there's multiple cards involved in a fraud, we do require that the CAMS or CANS alert notification is included in that proof of loss. They don't actually say the name of that merchant, but they'll say that there has been a merchant that's had a breach between these dates. They'll have a number on that, and then they will also have you go to their website and pull down those card numbers that were involved in it. We do need all that to tie the actual fraudulent transactions to the cards that were in the claim, or in the breach, rather. So it's very important, once you receive a CANS alert, to keep a record of that and keep a record of those card numbers. If you have extra expense coverage, cancel them, reissue them, put your claim in. The notice of an alert, CANS report, can be construed as notice of loss. And like all insurance policies, if you're having a loss, if your house is on fire, don't throw gasoline on it. Once you're notified that there is a claim happening, you really need to do some mitigation to reduce that loss. Okay? The side note on that. That help?
A question just came in on to clarify a point that you made, Tom. You made the statement that if something's covered by the bond, it's not going to be covered here. The person on the line is asking, what about the deductible? So if we've got debit card coverage under the bond with a $100,000 deductible, and yours is at 10, you're going to pay the claim because it hasn't been paid by the bond, right?
Yeah, that falls into that little category of who's excess and whatnot. And normally in that situation, it's like a prorated thing. They coordinate them somehow or another, and some is paid by us, some is paid by them.
So the best thing to do would be to remove debit if somebody buys your policy, to make sure that they're removing debit card coverage from the bond.
You bet.
Yeah. Good. We've got just a couple minutes left. You've got Kevin sitting in the wings, ready to talk about EFT Guard. This is a product that I'm very interested in because I'm hearing from my clients that their customers aren't necessarily buying the right insurance. So go ahead and introduce Kevin, or Kevin, talk to us a little bit.
Thanks, Scott, and I'll keep this brief. The product's pretty straightforward, and I understand running short on time, but essentially what this product is designed to do, Tom spoke a lot about the threats as it relates to the issuing side, and what this is designed to do is address those similar threats as they relate to a bank's commercial online banking customers. And specifically what it does, it covers the third-party account takeovers of those commercial accounts, otherwise known as EFT fraud. So that would pertain to, wires, ACH, and the commercial side, and excuse my voice, I think I'm getting a little bit of laryngitis, but the commercial accounts, they're not protected by Regulation E, so, banks aren't required to make them whole. And actually, if you do a little bit of searching on Google, there's a plethora of cases of commercial accounts that got hacked in one shape, form, or another. And there's one famous quote from a large bank stating essentially, quote unquote, tough luck, and that's not our problem. If you go to the bottom of the slide there's just a couple instances, $150,000, $97,000, and that second instance there, was one hack was for $46,000 that was siphoned off to some bank in Eastern Europe, and then 1 week later, another $51,000. The last example that I put there, I think it's just interesting to note that was done $1.2 million in a half an hour of 43 separate transactions. And it just makes you think, like, if that's, and these are large financial institutions that are essentially in the spotlight, but at the same time, they're not required to make whole on their customers, and now they have to decide whether or not, okay, do we go into our own pocket, reimburse our commercial accounts, and then they can potentially run into the issue of discrimination, because we have a large commercial account, do we make him whole? But the little guys that have only so much and do only so much business with us, what do we do with that account?
And
so
the bond
is
the bank's bond is not going to respond to these because the bank's not responsible for the money. It's not.
Right.
The bond is designed to pay for bank loss of the bank's assets. Yeah, and because of Reg E, we don't have that exist on the commercial side.
So Tom mentioned a few of these the sources of the threats here. So this is slightly redundant, but these are just some potential sources. Whether they be email links, infected attachments on those links. If an employee has a flash drive and decides to import a document or photos or whatever. And another interesting thing, which I think was pretty important to note, that a lot of companies, they don't really block, for the most part, social networking. And there's a lot of, on these quote-unquote safe social networking sites, these little links that people will share, on some news or some story that they find interesting. And they look safe, they look secure because of the fact that it is a well-known social networking site. But when you click on that link, there's something that's going on in the background that's infecting your computer somehow or another, and it's just another potential threat that's out there, but disguised as really something safe, and even if it is through a reputable and perceived secure site. So you can go ahead and click to the next slide. So, and this is just essentially a compressed version of the actual process, and really, you have the victim company, and the hacker or the software that is now infected that victim company. That money gets instructed by the hacker or software to be sent to this bank in whatever country it may be. Then that bank then sends money out to these quote-unquote mules, which distribute money accordingly. And it's almost like a drug ring. There's this high-level mule that distributes money accordingly. Everyone gets their cut for whatever role that they have in the process, and then on to the next victim. And rinse and repeat. That's essentially how the process works. You can go to the next slide. So this product was just literally just rolled out. It was developed by RGS Group up in Michigan. The paper company is Voyager Indemnity. It's rated AM Best. The carrier AM Best A. The carrier is Assurant. And it's more like a packaged solution where it's not just an actual insurance policy where you're covering X amount of dollars for a account takeover. It provides educational resources to educate the employees of the ongoings in the fraud realm and other potential threats. There's a risk assessment that's included. There's antivirus malware that's included as well, and essentially it's backed with the $100,000 policy to protect that commercial account. Here's what I
thought was interesting about this. My approach to this with my clients has been that they need to educate their business customers of the exclusion and regulation E, and the idea that the bank isn't responsible when the bad guys get access to bank funds effectively through the customer. So the bad guys access the bank account through the customer's password, computer system, whatever it is. And so my approach has been, tell your customers they need to buy employee dishonesty coverage, they need to buy computer fraud coverage, and they need to buy funds transfer crime insurance. And what this does is allows the bank effectively to push coverage onto their commercial accounts. Isn't that a way to look at it, Kevin?
Absolutely, and really, I'm glad that you mentioned that because it brings about an important point as to, okay, if I am a commercial customer, all right, I do have a crime policy in place, but as a bank now, you can dig a little deeper and say, okay, do you have the appropriate computer coverage component into that? What's the limit on that, and what's the cost? And then you can compare apples to apples, or maybe address a topic that was unknown in the first place. How many commercial accounts out there, to your point again, how many commercial customers out there don't even know that they think that their bank is going to reimburse them no matter what, because of the fact that I am at Bank of America, I am at Chase Manhattan, so no matter how much I lose, I'm going to be made whole. But that's not the case.
So ABC Bank and Trust wants to offer this to their customers. Talk about how that works.
All right. So really, there's two options. You can go almost like an opt-in route where a bank will make this coverage available to their commercial accounts, and whoever wants to opt in gets to opt in, and they aggregate that list of customers on a monthly basis. They compile that in a report to us and email every month, and it's billed accordingly. And the coverage takes effect of the first of the month of the following month that they opt in, almost like when you join a new company, how your health insurance plan works for the most part. The other option is essentially called an embedded route, where everybody who has a commercial account with this particular bank would now be covered by this policy. The bank could either choose to generate some fee income on top of this for this coverage, or essentially cover that cost, or maybe even subsidize it somehow by charging only a portion of whatever the bank pays. It's really all up to them. But it
so under
provides
option
that,
one, excuse me. So under option one, if the bank has 1,000 commercial customers, they can send out a flyer or make this known to their customers. And out of 1,000, if 200 of their customers decide to buy it, then they report those 200 customers to you on a monthly basis. And there's a monthly premium?
Yes, it's $8 per month per account, per commercial customer. So. And
the other option would be that the bank decides to give this, if you will, to all 1,000 of their bank customers, or within a class of customers. One of the advantages that I see here is that if a bank offers this to their customers using your option one, and then 6 months later there is a loss, and a customer who did not buy it comes to the bank and says, hey, they hacked my account, they had my password, they got in through malware on my computer, whatever it is, the bank can basically say, well, we offered this product to you. We told you about Regulation E. We've done everything that we were supposed to do. You decided not to buy this insurance or to go to your own insurance agent. I mean, this coverage is certainly available through a bank customer's commercial insurance agent. We're sorry, but there isn't much that we can do. It's almost plausible deniability, but you've done your due diligence plus some is the way that I look at this, and that was part of the interest. I mean, even if a bank doesn't, even if only 10% of a bank's customers decide to take advantage of this, there's an advantage to the bank in the other 90%, because you can honestly say, we told you about this, and you made a decision not to do this.
Absolutely, and forget about the actual loss on the account. What are the expenses, to your point, that you're avoiding? What expenses is the bank avoiding now because of this? It's similar to where an agent goes out and recommends certain coverage, and if their client opts out or decides not to buy that coverage, they can say, should a claim come in, say, like, listen, I made you aware that I recommended this coverage. You said no, and here's your here's your signature, and
From my perspective, one of the maddening things about the insurance industry is that most, and I've got some agents on the line here, so I'm going to point fingers at you guys. Frankly, most commercial insurance agents for their small commercial clients do a terrible job of selling crime insurance, and that may sound like of course an insurance agent is going to sell insurance, but when I look at a small, and I don't do a lot of work with small businesses, but when I look at a small business insurance program, I'm almost always looking at, something silly like $25,000 of employee dishonesty coverage, no coverage for computer fraud, no coverage for funds transfer fraud, and it is an undersold insurance coverage. And that's going to put pressure on the bank because your customers, the bank customers, don't have any other place to turn. So they lose $200,000 out of a checking account and out of a line of credit, and they're coming after the bank because they don't have any other place to turn. And when you tell them, no, we're not responsible for that, they're going to seek out a lawyer, and that's when we look at claims like the Patco claim, where a business said, yeah, but you should have done more. Well, I think that we'd see fewer of those and fewer access into cyber liability coverage, which is another issue, but fewer realms into that if your business customers had another place that they could turn to bring them back to a spot. Computer fraud is going to be one of the key areas that causes business failure. You have a $200,000 uninsured loss for a small business. That's the difference between survival and not. End of editorial.
Yeah, I definitely agree with you, Scott. I think to your earlier point, it is a couple things. It's education or lack thereof, and also to your criticism about the agents that are out there for a particular product, be it crime or whatever. I think And my background in underwriting from the insurance side is from the small business segment within financial institutions. So I have seen a lot of what you're talking about from the submissions that I have received from agents, and it is a lack of understanding of the true exposures, regardless of the size of the account. Just because you have a mom and pop shop down the road doesn't mean that their actual exposures, the risks aren't any different from a multi-million-dollar bank down the street. And and the thing is, though, those people with that level of sophistication that are working on these larger banks and larger institutions, they don't want to worry about. They don't want to deal with these smaller accounts, so they're going to give them to someone else, and therefore you're losing that valuable expertise that you actually deserve when you're seeking out someone to properly cover all the exposures. Forget about how much it costs, but just at least make you aware and properly educate you, because those are the losses that can put you under.
I've done a video that I encourage my bank clients to give to their or point their commercial customers to on crime insurance to this very issue. And my recommendation is that any business with employees needs at least $250,000 of employee dishonesty coverage, computer fraud coverage, and funds transfer fraud coverage. Now, they may also need other forms of crime insurance, but to me that's the starting point for even the smallest mom and pop card shop, because all three of those things can cause the downfall of a business. We are way over time. Well, Tom, thank you very much. Kevin, thank you very much.
Thanks, Scott.
All of you have. Thanks, Scott. All of the participants should have copies of the slides. I've recorded this session. All of the participants will be getting a link in the next couple of days to a recording of this session. I just need to clean it up a little bit. I've got a tech guy waiting for the raw file. We'll clean it up. We'll get it out to everybody, and so you can listen to it at your leisure or share it with others in your bank or in your insurance agency. Thank you all very much for attending. I am setting up another session with another provider of bank insurance coverage within the next month or so. All of you will be getting notice of that. And if I can be of service, please give me a call. And again, Tom and Kevin, thank you very much. Enjoy the rest of your day.
You too. Thank you.